The pair that I'm asking you to look at is Aster DM for one, and Yatharth Hospital. The reason I'm asking you to look at these two is that Ekam Baraya, who is writing in from Hyderabad, is wondering whether to sell Aster DM, which he acquired at a price of 436, and to instead put money into Yatharth Hospitals, which has already had a pretty decent run in 2024. It's up about 63 odd %. It has, of course, come off just a tad bit from the high point of the year. So is that a good strategy to employ?
So first, looking at Aster DMC, Aster DM has also witnessed a remarkable rally because from almost 300 levels currently, I would say recently, the stock had in June, it had made a low of 300, and then again, recently the high was around 520. If you go back in time, we see that the stock had made a all-time high of 558. So from there, the stock has corrected, but the trend remaining strong and positive for the stock. Now, looking at the other stock in comparison, if I look at Yatharth, Yatharth has also witnessed a very sharp rally. So ideally, both of the stocks look good and positive on the charts. Yatharth, though, has a less piece of data from a technical perspective. What we're seeing in Yatharth is that somewhere towards the 650, 670, 680 levels, there's a lot of selling pressure that's coming in. And also, if you look at the intermediate term trend of the stock, that clearly shows that it's gone in for consolidation. So yes, what can be done is that if there is some correction in Yatharth towards 570, 580, that can be a good level for entry in the stock. And once the stock starts sustaining above the 650 mark, then one can expect a major rally. Otherwise, the stock is in for consolidation.
Right.
So there's not much room for change as of now.
All right, that's the view coming in on Yatharth Hospitals on charts. But, a few weeks ago when we spoke to the management also, Alex, he'd given a good EBITDA margin. In fact, even in their con call, they said that they would see a strong EBITDA margin ranging between 25 to 26% and 29% for their already matured hospital. So that was an interesting takeaway from their con call as well. But moving on, we have our next caller. Kiran from Mumbai is calling us. Kiran, thanks for calling in. Good morning. How can we help you?
Yeah, I just informed that I'm holding around 9,000 shares of GMDC, which is Gujarat Mineral Development Corporation.
Okay.
And my average purchase price is roughly around 400.
Okay.
I can hold the stock, and I wanted to know the medium to long-term perspective of holding the stock.
Okay, Kiran, 9,000 is a very significant quantity, I wanted to understand as to what was the thought process behind buying these 9,000 shares. I believe it is in staggered manner.
Yeah, it has been in a staggered manner, but I wanted to park certain funds there, and I was informed that it's a very strong fundamental company, and it's developing a big coal mining asset as well. And of course, there are some special minerals also that are being explored by the company. So it holds a good promise as far as the sector is concerned.
Okay, you were informed this, or this is your own research?
Yeah, I have read about it.
Okay. All right, Saurabh, I'll come to you for this one. Your view on GMDC?
It's a PSU company, first of all, and on the valuation side, it is on the comforting side. But what is happening right now is the coal prices are cooling off, and that is why the earnings, the margins, and the profitability is also cooling off, and that is the reason the stock is underperforming. It is very hard to predict when the coal prices will start moving up. And whenever they start moving up, the stock will dance to the tune. So in that sense, I'll suggest it, since it is a good company, good PSU at good reasonable price. So I'll suggest a hold.